This is the seasonal stock and ETF report for today, November 21, 2022. Let's go to trade seasonals and take a look. We've changed some things. The default now is S&P 500, and it defaults straight into 10 years with 10 of 10 years opportunities. Top of the list on S&P 500. Look at that United Healthcare. United Healthcare in next 18 days. In the last 10 years, it has made 3.86%. 10 out of 10 years with a whopping 3.0 Sharp ratio. This is pretty good. Look at this. The highest gain was 5.23%, and last year was 4.91%. So this is, looking at seasonal chart, we can see this incredibly big sharp up move this time of the year. This has worked well for United Healthcare. Let's go see if we can look at the last 20 years. When did it fail? Well, in 2004 and 2009, it was slightly down, but pretty flat, but it failed in 2002. It dropped 9%. Otherwise, this is pretty solid. On 2008, when markets were pretty weak this time of the year, it went up 21%. Let's go to see Broadcom next. This one. Broadcom, also a very high Sharp ratio, average 3% in the next 8 days. It's probably corresponding to an earnings report, possibly. Micron also has a good Sharp ratio this time of year, 3.41%. I think technology is going up, so is healthcare. This week of Thanksgiving, bookings used to be number 1. It dropped to number 4 now on S&P, 2.31. All right, let's look at the rest. On the Dow, United Healthcare is on the top, then Visa, McDonald's, and IBM. The reason we only have 4 is we went to 10 of 10. We used to default to 9 of 10 to have more opportunities, but it's better to go to 10 of 10. If you want to see a larger list, just reduce the number of profit years. Here, when I go to 8 of 10, I get 28 opportunities on Dow alone. If I'm on S&P 500, 10 of 10 is 75 opportunities, but if I go to 8 of 10, it's 429. Of course, a lot of the bottom ones aren't as good because of inconsistent returns. That's why the Sharp ratio is low. But the top ones, where the Sharp ratio is high, means the risk is lower, means the average return from year to year is pretty consistent with fairly low standard deviation. How about NASDAQ? Broadcom's on the top of that list too. And then Booking and T-Mobile. Baidu, a newcomer to our lists. Look at that sharp up move and then a drop. That doesn't look very safe unless you're just there for a pop and get out. Texas Instruments, 8 days, almost 2%. Electronic Arts. Wow, look at this sharp move here. Coming in May. But this is a long-term deal. Makes average of 30.6% last 10 years. Not bad. This is definitely good for a long-term investment. And we saw Micron and so on. Anything new on Wilshire? No, maybe Lantronix. Sharp up move right here. 53 days making 13.7%. Okay, let's look at ETFs. Oh, another thing, ETFs now default to 20 years and with 90% or 18 of 20 years profitable. It's just because they have such good um, returns on ETFs, at least measurable. Healthcare lost in 2015 and 2018. Otherwise, it has made an average of 5% in 55 days, 18 of last 20 years. Consumer staples, 1.82%. It lost in 2002 and 5. Otherwise, it's been profitable for next 22 days. S&P Mid Cap 400 Spider. It's made 11.3% in 200 days. Lost last year. Made a whopping 27% in 2020 though. And all these other years are green. It's a good opportunity to consider. Okay, that's it for